Nosotros, Nick Lemis, jefe de ventas de Pacific Asset Management. Nick, good morning.
Good morning. Thank you for having me on.
Thank you for having this time with us. What is Pacific Asset Management? Who formed it? And where are you going to bring different to Spain market?
Okay, well, it's a pleasure to be here. Thank you very much again. So Pacific Asset Management, many of your listeners may or may not have heard of before. We're a London-based business. We're a diversified asset management business, in fact, established about 5 years ago. The firm's CEO established it. He's a chap called Matt Lamb. He has had a bit of exposure in Spain previously. In fact, Matt Lamb and I used to work at a company called GAM, London-based asset management firm, global asset management firm called GAM. So Matt went on to have a number of kind of senior roles at Deutsche Bank. And whilst at Deutsche Bank, he got in touch with some long-standing old contacts of his. In fact, it's a well-known London-based family office. This London-based family office has got a very well-established track record of backing some very well-known asset management firms here in London, some of which you may have heard of, River and Mercantile, Thames River, which later became known as Nevsky Capital, and Lions Trust, all highly successful, listed in the UK stock market. So we've got an exceptionally good backing, and we've got a CEO who's extremely experienced in the business. And a little bit on our product range, I guess. So we're a $4 billion AUM.
Sorry, Nick. Sorry.
Yeah.
1 minute, because you are on the bottom of the camera. Could you realign the camera, because our audience could watch your speech in a better position? Like this is perfect. Sorry.
Okay, no problem. No problem at all.
Sorry for the.
Yeah,
yes.
No problem at all. No. It's good that you told me. So yes. We've got an AUM of roughly 4 billion. About 2/3 of those assets sit in the multi-asset division, and the balance of those assets sit in the single manager division that I'm responsible for. So I'm head of sales of the single manager division. Now, you asked me what differentiates Pacific Asset Management. Well, we feel that the investment world has increasingly become homogenous, dominated by passive investing, be it like indexes, ETFs, or factor investing. And a true reflection of that industrialization of the asset management business is the fact that everybody is really offering very similar type products. Active managers these days are not just competing against their peers, but also all those replicators that I mentioned. Therefore, it's essential that we find a range of funds and teams that are difficult to be industrialized. So we use the collective term craft investors to describe our single manager range. So very differentiating and hard to replicate by the passive and indexes and ETFs. So the first manager that we managed to get on board is a team called North of South. They're in boutique EM managers, in fact, and their core fund is called the Pacific North of South EM All Cap Fund. It's a very well recognized label here in the UK. It has a very strong value and quality bias, and the strategy launched back in 2009. In fact, Matt Lamb and I have known the team for many years, since they used to sit on the GAM platform. Their performance has been extremely strong. In the 11 years that the strategy's been in existence, they've outperformed 9 of those 11 years. And they've got a very strong institutional following. A significant amount of their assets, I would say almost a quarter of their assets, comes from institutional investors, both in Europe and in the US. More recently, they've been given a buy recommendation by a top-tier global consultant, and we've managed to raise for them roughly $1 billion over the course of them being on our platform, which is now about 5 years. More recently, just to quickly add, they recently launched EM Income Opportunities Fund. So over the summer months of 2022, we launched that. And the current gross forward yield on that fund is roughly 9%. What we're seeing is actually many investors at the moment have identified income as a strategically important form of return. So rather than just concentrating on capital appreciation, I think a lot of investors now are targeting income. So we've kind of answered their call and launched that fund last year. We've seen particularly a lot of interest from large family offices for that product. So that's our first product. As I say, it's run by North and South, a boutique EM manager. The second manager group that we got on board here at Pacific is the PAM G10 Macro Fund. They employ a relative value mean reversion strategy. We think this is very differentiating in a world where macro has been deeply out of favor. There are very few macro managers left, certainly in the kind of regulated format. This team is made up of 3 highly experienced PMs who launched the strategy back in 2006. So this strategy, again, has been around for a very long time. What are we trying to achieve with the strategy? Well, of course, it's uncorrelated type returns, and it's got a proven track record in that. And we target a steady type return of about 5% annualized. But having said that, we are capable of producing some much more interesting returns, which are typically found post-market dislocations. So some of the best performance has been in 2008 and 2009. And I guess more recently in 2020, during the pandemic, a year which was famed for not having very good returns, they were managing to return about 10%. Again, it got a very strong institutional following here, and the strategy now sits with about US $400 million. The next strategy that we got on board was a chap called Danny Sarumpa. He joined Pacific in 2021. He previously managed the healthcare strategy at AXA. I believe AXA is a pretty well-recognized brand in Spain. That strategy got to about 800 million in size. But whilst at AXA, Danny conceived and launched a longevity fund, which over the course of the 2 years he managed it, raised about 600 million. And again, I believe a significant amount of that 600 million came from the Spanish market. As the name suggests, the fund taps into the changing spending habits of an aging demographic worldwide. I think this is something that a lot of European countries can recognize. Aging demographics is not just a developed world phenomena. It's actually happening in the emerging market space now as well. We're seeing a cliff edge in terms of demographics in China also. But what I suppose differentiates our fund to what the AXA fund was is that we're also targeting a sustainability objective. So we're also targeting the S in ESG. So this is a sustainable Article 8 fund. We have a number of large clients eyeing this fund up. We only launched it at the end of 2022, so it's just coming up, just having had its 1-year anniversary, and we've got some very interesting and large clients invested. And the last thing just to mention, and I appreciate we've probably got a bit of a time limit, you may have heard in the financial press that we recently hired a manager called Chris Fiddick. Chris joined us from Finley Park. Chris is a highly respected portfolio manager, and we're aiming to launch a North American opportunities fund sometime in Q1 of this year. So keep an eye out for that. This will be a benchmark unconstrained, high kind of tracking error with a multi-cap focus. So we're optimistic we'll be in a position to launch with an AUM of about 50 million or over on day one. But it's fair to say that we're always looking for new management teams, so long as they kind of tick that craft box.
Nick, one question, because we have no more time, because I want to talk about markets, stock markets, and how is your outlook and your recommendation for investors about 2023. Could you make insights about what's your point of view about stock markets in 2023?
Yeah, absolutely. Yeah, sorry, I went on a little bit too long there. So 2023, well, look, I mean, we're following a very unusual year. 2022 was a very odd year, a year that basically saw a higher amount of inflation or increasing inflation, which led to higher interest rates, which resulted in obviously lower asset prices. But, I think it's fair to say that actually maybe it was a bit more normal than we like to admit. We are in fact moving away from a very strange environment of zero interest rates to a world where zero interest rates are over. In a zero interest rate environment, there is no alternative but to invest in growth stocks. But it's because that's basically the only form of return. In a world where there are interest rates or interest rates are being normalized, investors appreciate there are reasonable alternatives. So we might expect in 2023, it's going to throw up some clear winners and losers, which I think is going to play very, very nicely in the hands of active fund managers. We feel we've got a reasonable set of funds which have a reasonable probability of doing well. And, you know, in 2023, you know, looking back, I think maybe in 2022, we already started seeing this, the emerging market fund, which has a value bias. You know, emerging markets is typically associated in a risk-on environment, and 2022 was anything but risk-on. It was a risk-off environment. We still managed to benefit because we had that value balance. So I think investors are beginning to recognize that the environment of growth-led environment is changing and are actually balancing their portfolios accordingly. So I think it's going to be a very interesting time for a number of our managers. I think frankly, active management is back in play in an environment where you are going to have certain stocks performing well and other stocks not performing well. This is a time to employ money in active fund management. I think 2023 is also going to be a very interesting year and a very exciting time for Pacific as a business. We will be entering the Spanish market, which for the first time, and with the help of Lorenzo Parejas and his team at Campion, who have got some very strong relationships in the Spanish market. We think we've got the product range to tackle this very important market. I don't know if you needed me to say anything else, but you know, I think generally that's my outlook.
Thank you very much, Nick Lemis, Jefe de Ventas de Pacific Asset Management. Good day, good business, Nick.
Thank you very much for your time.